The exponential growth in ICOs has been staggering. It allows entrepreneurs to pursue their dreams without giving up equity in their companies or giving venture capitalists a seat in the boardroom. At the start of the ICO boom in 2017, most offerings quickly sold out, and record-breaking amounts were raised. But now we see that many don't get fully funded. Competition is getting fierce, and there are some big hurdles to overcome. How will a sale be implemented technically? How about legality and compliance with regulations? How does one deal with taxation? Say hello to ILP, but in the form of a loan. Instead of investing in tokens that have little liquidity and are bound to be extremely volatile, investors become creditors. Creditors provide loans by entering a loan agreement using a smart contract with the issuer. When creditors enter a legally binding loan contract, they receive what we call Future Loan Access Tokens, or FLAC. Each project that uses token notes white-labeled ILP will brand these tokens as they see fit. For businesses that seek funding, raising funds through an ILP is more affordable, easier to set up, and it's regulation-friendly because we've developed the fundraising structure from the standpoint of the regulator. Funds raised in the form of loans are not subject to tax. FLACs are transferable to others and can be traded on the free market. And ILP makes it easy to share profit or revenue as interest payments for their creditors. It's time for the next big leap in fundraising.